This is Bruce for Spartan Capital Markets, taking a look at the weekly technical market report. This is a very quick review just for those newer traders who want a little context on some of the key points, looking at some of the charts. So I'm going to go through this pretty quickly. So the coverage this week is the pound dollar, gold, S&P 500, dollar CAD, Tesla, and natural gas. Natural gas and Tesla geometric charting is used to take a look at, which is a bit of a unique type of analysis that's used on those two. So we start with the pound dollar, and let me just zoom in here, and you can see how, the pound dollar, we've got a potential double top, but it occurred above these previous highs. So we also have a continuation of this uptrend and a violation of this potential double top. So I think we may be seeing a bit of a fractal here where we have a double top that never really triggered down here, but then immediately failed. And this double top is not triggered. It does trigger at the center line here at 1.2344, I believe it is. So that's one thing to watch out for on the downside. However, there also is support of the 34-period exponential moving average. So we have a couple things going here. There's some signs of resistance here, but not a lot of signs of resistance. That means there's still a good chance it could keep going before we see much of a retracement. At the same time, a retracement is a possibility. So it depends on what happens next. If we pop above these highs here, the high of last week, then the chance of moving higher increases. If we drop through and trigger the double top, that becomes more bearish in the short term. But maybe it doesn't go far because we do have the support of the 34 EMA at the same time. So that's the pound dollar. Moving on. I think overall, though, to add to the pound dollar is overall bullish, and we're going higher. Then we move to gold. In the case of gold, we're very close to reaching the historical high up here around 2070 or so, and have stalled out the last several weeks and are consolidating, but with an upward slope. So we previously had a bullish pennant set up over here, a small triangle, but that failed. And so now the pattern has evolved into a rising flag or a rising parallel channel, which is generally bearish, similar to how a rising wedge or ascending wedge is also bearish. So eventually, there's just the whole thing runs out of steam and turns over. And it's also already making attempts to turn over. This line right here was drawn with 1, 2. Now this is the third, and then yesterday was the fourth test of that line as support. So if it breaks down below last week's low, it triggers a bearish pullback and will likely come down in these Fibonacci levels and probably hold support of the uptrend line. So I don't expect a lot to happen down here, but we do have a divergence with the relative strength index, which is also bearish. At the same time, if we do get a breakout above last week's high, then we could go up to the previous high or the top of the channel and still test the 2070 record high from before. In other words, we could still go to new trend highs, but stay within the ascending bearish, potentially bearish channel. It doesn't have to end up bearish. If we have a decisive rally above the top line, then the scenario changes. Now we have a breakout, something that looked bearish but turned quickly bullish. But this RSI turning down and accelerating to the downside gives me a little caution about that. Even if we do have price go up, I don't know how sustainable it might be without some retracement first. That's what the market says to me. Let's move on to the next, which is the S&P 500. So there's a bunch of stuff going on with the S&P 500, but just to give you a kind of quick synopsis, we're in a resistance zone that is defined by this internal shorter downtrend line, therefore not of significance, and it's only a trend line, which is generally is not tremendously reliable, but it gives us some guidance. But when you combine that with the 50% retracement of the full downtrend, the green, at the same time hitting the 88.6 Fibonacci retracement of this downtrend, that tells me we have to be a little careful here, and there's a good chance we're going to pull back before we go higher, if we are to go higher. If we go higher before that all happens, that's pretty bullish. And one of the reasons for that is because we have a key pivot here for the reasons I just mentioned, and I'll get to some in the bigger picture in a moment. But you know, a retracement would be normal and expected, and that's what I would anticipate, a little bit of a deeper retracement at this point before it's ready to go higher. The other interesting thing is you see here on this last retracement of this uptrend, we reversed around the 88.6%. We don't always do that. That's a pretty extensive retracement, right? That's like the maximum Fibonacci retracement level you could have. And then we did it again here. So it's showing some relationship in the market. So what's interesting is if you look at their percentage decline here, it's about 9.1%, I believe it is, or 9.2%. And the percentage rally here is about 9.1, 9.2%. The decline, and there's also a relationship with time here, how long it took. So that also tells me two things. One, we have a significant potential resistance, but also if we break out of that resistance, that's also a big deal. And one of the reasons for that is also we can see on the bigger picture, if we look at the weekly chart, we have a pretty clear head and shoulders bottom here. And for those really technically inclined, as in technical analysis, we have a double right shoulder really. So the initial breakout was right here, but then it came down, so it restructured itself into a larger head and shoulders bottom, or inverse head and shoulders right here. So a breakout above last week high is also a trigger for a breakout, second breakout, or a breakout of the second inverse head and shoulders, or head and shoulders bottom. So that's pretty bullish. So it's very bullish for a variety of reasons. If we have a shallow pullback and then rally to a new high, or above that, or trigger that breakout, that's also very bullish. I have no idea which way that goes. We'll have to wait and see. Now we move on to the dollar CAD. So the dollar CAD, first of all, let's look at the 200 period exponential moving average, this blue line. We bounced right off it, double bottom, nice breakout, got quite a ways up from there, but came all the way back down and broke through support. This is not bullish, right? This is bearish at that point. However, since then, we have sharply rallied. The last 6 days overall, that's going up. And we closed above the 34 period exponential moving average. The only thing we didn't do is close above that previous swing high. That will be the next sign of strength and what would be expected. Also, look at how oversold we were in the RSI. You can't see this historically, but we got to go back a little bit before we got this oversold. And so what this is doing in this rally, in my opinion, is it's kind of negating the bearishness potentially of dropping back below the 200 exponential moving average. And so I think that it's done with that now, and that clears it up to to further rally. However, in the short term, I wouldn't be surprised for a stall or a rest or a pullback or retracement at some point, to some degree. The first target being up here at the 62% retracement zone and the downtrend line around 1.3647 or lower, probably, unless it spikes right up there in the near term. That's the dollar CAD. Moving on to Hathaway analysis and geometric charting. So the first chart here is Tesla. And what Tesla is telling us is that when taking a look at the various geometrical relationships and more current price action with previous price action done with circles and angled lines and so forth, it's determined that this is a key pivot support zone right here that was reached last week, and that there's a good chance that Tesla has bottom and could see a very enthusiastic rally off that bottom. So that's pretty significant. It also tells us that we have really good risk reward because we'll know if it's wrong very quickly if it goes below last week's low. Now, a short, small dip below last week's low is not a big deal because maybe that at that point it may spike right back up. If that happens, that's still very bullish. But if it keeps dropping, of course, you don't want to be in it because that's a violation of what we're seeing here in the analysis. You can see how we have the circle, the dash green circle here, coming together with the -7/10 angled line right here, the tangent to this larger circle here, and then we have the other angled line right here, the dashed dotted angled line here coming up and intersecting at that point as well, marking the bottom of price. And then finally, finishing up here with natural gas. Natural gas is at a very key pivot here. To just get to the bottom of it, we have this tangent, the 1/5 tangent line to the circle in blue, intersecting with the 1/12 tangent coming up from the bottom of the circle. And these relationships have to do with previous price action, therefore show a geometric connection with what's going on right now. And what this indicates, we're going to drop hard down to 70 cents, not tomorrow, but that's where it's headed. Or we're going to break out and start to trend higher with a little bit of enthusiasm up to an eventual target of 532 or so. So it's obvious we're in consolidation. What this says, that's a good shit. And there may be some hope on the horizon that volatility picks up in natural gas. So that's it for this week, traders. Have a great week. If you have any questions, get in touch with Andre or in the contact information at the bottom of the newsletter. Take care.